We're here at the New York Stock Exchange on a Friday, and we're seeing U.S. stocks higher as well as the U.S. currency. Now, earlier this morning, we got the jobs report, and non-farm payrolls showed a gain of 222,000. But at the same time, we saw unemployment rate stay steady, and wage growth come in below expectations. So joining me now is Keith Bliss of Cuttone & Company, and he'll tell us about the jobs report. Keith, great to have you here.
Thanks, Remy. Always good to be with you.
We got that jobs report, and we saw the U.S. markets higher at the open. But given all the action we've seen this week and higher bond yields, what do you expect to see in the coming week?
Well, it's interesting, the market's reaction to the jobs report, as you said, because it's one of the first pieces of macro data, U.S. government macro data, that we've gotten that actually exceeded expectations since April. The data has been very disappointing. At least the public data has been very disappointing since then. So I think as long as the data starts to pick up a little bit and it starts to exceed expectations, both with inflation data and then jobs data for the next month, for the following weeks, I expect the markets to continue to trend the way they are. The minor blips and the sell-offs, people were getting a little nervous. But I think we'll continue to grind a little bit higher. I don't see a catalyst either on the upside or the downside inside of this market. And with that, I think the market, the lack of participation will continue throughout the month of July, and I don't expect any big surprises.
Well, it's important that you mentioned that, because in terms of fundamentals, we have geopolitics as well as politics. Now, in Hamburg, there are plenty of protests ahead of as G20 gets underway, but we also have Janet Yellen testifying next week before Congress, so we'll keep an eye on those comments. But in terms of technicals, what levels are you watching?
Well, right now we're neutral in the markets. Certainly the bond complex got oversold in our work pretty substantially across the board. In fact, last night with the sell-off in the rising rate environment across the U.S. Treasury yield curve, the 10-year note got oversold. So I would be going in and buying the future on that. But as far as the Dow, the S&P, the Russell, and the NASDAQ, we're neutral if you're on the long side.
And Keith, in the short term, I'm sure we'll continue to see summer doldrums, but one term we've been hearing, and I'm sure we'll continue to hear, is taper tantrum. Now, given the central bank expectations around the globe, what do you expect to see for the rest of this year?
Well, I think the taper tantrum will more likely happen over in Europe, like we saw when Mario Draghi was talking about pulling stimulus away a little bit earlier than the market thought. I don't think you're going to see a taper tantrum here in the U.S. markets like we did when Ben Bernanke, the mere notion of pulling back on quantitative easing or removing Operation Twist when he did, and the market sold off pretty dramatically. It's interesting, the Yellen Fed is so precise and aware of sending signals and telegraphing their moves that the market has enough time to blend in the move. I remember when I started my career, 25 years ago, the Greenspan Fed would just come out and boom, they would make an announcement on interest rates and the markets would go crazy. So I don't think we're going to see a taper tantrum here. It's certainly one of the reasons that the Fed is going to be able to raise interest rates, I think, again for this year, and my calculus on this has changed recently, is that financial conditions here in the U.S. are very easy at this point in time. You've got a stock market at all-time highs. You've got easy credit. You've still got low interest rates. People are going to the borrowing window, and people are still, and unemployment is very low. That's going to give the Fed room to move, even though we don't have that rampant inflation that they're really looking for. So there will be no taper tantrum here in the U.S. markets unless they surprise us from a 25 to 50 basis point. I think the taper tantrum will happen more overseas.
Okay, Keith. Well, thank you so much for joining me today, and as always, thanks for all your insight.
It's my pleasure.